Ladies and gentlemen, it's Adrian Zdunczyk, CMT Charter Market Technician. Some people know me as Birb, but I'm here today to be your host for an incredible roundtable discussion around the very important and thriving topic of real world assets and beyond. And I'm here joined by our incredible panelist speakers, by Ivo Grigorov of Credefi, who are incredible partners, by Steve Lawrence and Bart de Bruijn with EstateX, with Joy from Alvara Protocol, incredible partners again, with Kyle from LandX Finance and Edwin Mata from Brickken. And as your host, I'll try to keep my mouth, shut as often as possible, because today's lineup just asks for incredibly talented and gifted voices, and you have everything it takes to answer the very important questions. So why don't we start off with a brief round of introductions from you guys? Starting off with Steve from EstateX. What's happening? How are you feeling? How's it going?
Good. I mean, overall, I'm feeling phenomenal. Happy to be here as well, and a great quality AMA. I'm a little bit under the weather at the moment, so excuse me if I mute to cough or things like that, but the show must go on. Overall, it's amazing. So I'm the CMO at EstateX. EstateX, we're real world assets. We're tokenized real estate, and we're literally doing it in what we feel is the right way. We'll get into obviously the status of RWA and what has worked and what hasn't worked and the reasons why. But with EstateX, we actually pride ourselves in actually doing RWA the right way for Web 2 and also for Web 3. And happy to kind of really get involved with this conversation, because there's some good things that we need to get off our chest and that we need to discuss.
Thanks so much. And on the same note, Bart, I'd love you to give a brief introduction about yourself.
Thank you, Adrian. Appreciate the spotlight. I think Steve already summarized very well what we do and how what narrative we're in. So very excited to speak on this panel. My name is Bart. I'm Dutch. I'm the co-founder of EstateX, and we've been building this for now over 4 years, already more than 4 years into the RWA/tokenization space. So obviously well aware, see some familiar names, and happy to be on a panel with these thought leaders and share some great ideas.
Thanks so much, Bart. And now, upcoming, we have Edwin Mata of Brickken. Let's give it a round of introduction for yourself, Edwin.
Yeah, hello. Thank you very much for the invite. So I'm Edwin Mata. I'm the CEO and co-founder of Brickken. Brickken is a tokenization platform which we go for financial instruments. So we embed debt, equity, bonds on chain. And we basically provide technology as an application for any company in any jurisdiction to be able to onboard themselves. So far, we have tokenized over 250 million in 40 different countries. Here, fellow builders grinding every day, trying to make RWA great. And happy to be here sharing some insight and discussions around RWA. Thank you.
Thank you so much. Very well done. Ivo Grigorov, the floor is yours.
Hey guys, pleasure to be here. Pleasure to speak to all of you. We're here from Credefi. I'm the co-founder of it. We have been trying to transition this concept of financial instruments, bringing them on chain, especially in terms of debt financial instruments towards SMEs. However, our core expertise is in actually evaluating such kind of debt instruments and positions, especially when it comes to real-world collaterals. So, happy to be here and happy to engage into the discussion.
Thank you so much. And now upcoming, we have Joey van Etten of Alvara Protocol. What's happening with you, my brother?
Hi guys, I'm Joe. I'm head of BD at Alvara. And we're actually here to bring all the RWAs together into tokenized basket funds. So there's a place for all of you guys in the ERC 7621 we've built, which is the basket token standard. I've been with Alvara since the beginning, helped found it, and now we're 1 month away or so from releasing product.
Beautiful. And that's very well done, and huge shout out to every person who's spoken up so far. And what we've got remaining is Kyle right up here. Come on, my brother, what's up with you? How are you feeling?
Hey, I'm good. Yeah, I'm glad to be here. Looking forward to the discussion. I'm with LandX. We are tokenizing agricultural commodities. It's kind of a two-pronged effect, the value proposition that we bring to the landscape. So we've got a ton of farmers around the world who need financing to expand operations, level up productivity, increase efficiency, things like that. And so when they seek financing, they have very limited options. We engage with them, and if we provide loans to those farmers seeking financing, then we enable them to make their loan payments in agricultural commodities which they farm, and we then tokenize those and make them available on-chain to digital native investors.
Beautifully said and well put through. And right 2 or 3 minutes into the discussion, we already broke well over 1,000 viewers live, which is going to be rising just the way that we expect the RWAs to rise. However, without further ado, I'd love to take your brain, Kyle, actually starting from the very last position right here. Why should we care about the RWAs at all?
So yeah, that's an excellent question, and usually the first one that Web 2 normies ask, right? So basically, RWAs. I mean, we've labeled them RWAs, but before blockchain, they were just assets, right? So we have given them this new nomenclature because we're referring to them in their digital form. This is all just symptomatic of the natural evolution of finance and the natural evolution of technology. We're in 2025. We're seeing emergences and the evolution of AI every day to make things more automated and bring us into a futuristic society. So if you take a step out of the day-to-day and look from a high-level viewpoint, using physical pieces of paper, metal coins, and these antiquated middlemen-infested banking systems are just an antiquated, outdated ideology that's riddled with inefficiency, opaqueness where there should be transparency, and just a whole laundry list of disadvantages. RWAs are just the next evolution of finance. It's the modernization of finance. So we're not talking about getting rid of these asset classes that traditional investors have come to know and love over, frankly, centuries. We're just talking about improving them by creating digital representations of them online to streamline business and make day-to-day operations in virtually every aspect of our lives far more efficient. So I think it's inevitable, and I think that it's a no-brainer solution. And for the longest time, we've just been impeded by regulation on an international scale. But finally, we're looking to make some progress toward that. I'm really excited to see what the next 2 to 3 years bring.
So the question, just to put the weight towards the last part of the question, is why RWAs now, right? And Edwin, I'd love to pick up your brain. What's special about today? What's special about 2025? What's special about February 2025 that wasn't there before that makes RWAs relevant?
Yeah, so I mean, when we started in Brickken in 2020, we used to call them security token offerings, and that was a horrible word, right? Everybody was scared because everybody's like, "Oh, the SEC is coming for you. It's the big bad guy." And whoever rebranded it into RWA really made us a favor because it came kind of like a cool word, right? Kind of like everything in blockchain has its own cool word. We needed one that was not scary as a security. And ever since 2020 to 2025, we've seen kind of like the trend as to some people tipping their toes, some banks issuing bonds on chain, saying, okay, we're in testing phase. I mean, it's not a real, it's a proof of concept, but proof of concept goes miles. So it sends a wave of trust and credibility to the space. And then obviously 2024, we got like the big March securitized BlackRock, the build, and that just kind of like sent the way, okay, this is a real thing. Like the biggest asset manager in the world is testing now technology, but it's not only testing, it's actually monetizing. It became to be one of the biggest monetary funds out there. So it's crazy. And so when you ask me why now, it's basically because there's also like a trust foundation. So it's not just builders, startups saying, hey, this is kind of like what's going to be the new modern form of financial markets. I mean, the legacy system needs to be upgraded to a new system, and on chain it happens to be the more adequate one. So now today we're even seeing some countries actually pursuing tokenization. In Europe, they have like the DLT pilot regime saying, hey, we're going to see exchanges being built on chain, how security should be on such. Then we had yesterday the United States saying, hey, kind of like we can also start talking about securities happening on chain. Maybe the SEC would be the regulated one, but we need clearance on how the legislation should happen. So why should be today is basically that jurisdiction-wise, there's more clarity as to what happens when a security is on chain or a digital twin of a financial instrument. there's credibility behind like just the BlackRock, all the big ones, JP Morgan, or all the big ones saying, okay, we already have tokenization technology infrastructure. We're testing all of these financial instruments already today. And countries themselves kind of like pursuing an upgrade on legislation as to how that should look, where trust and credibility is matching each other. And now it's easier for us to educate the people because there's an active interest, because nobody likes to be left behind. We're talking about trillion euros market, right? So I think it's a great starting point for us 2025, regardless of the markets, how they are. RWAs are about to explode. There's zero doubts.
Bart, what do we make out of that?
Yeah, no, I'm completely on the same page. Because back in 2020, when we started with EstateX, we were, the same situation again. The STOs was a scary word. Anything with securities was a scary word, and especially because securities are so heavily regulated, and you add a not as publicly known as today blockchain component to it, which makes it a security token, it even scares off more people. So I completely agree with that, and we're completely on the same page. And I think that we're actually in a very, very good position at this moment for RWAs, perhaps even the strongest position we've ever been in. And I think that with Larry Fink constantly talking about tokenization, all the researchers that confirm that trillions of dollars the market will be by the year 2030. I think everything is accelerating nicely according to plan. We see it more and more mainstream. Even the CEO of JP Morgan constantly saying that crypto is a scam, but tokenization is a real thing, and that is what definitely is gonna transform existing markets. Definitely, if you look at property wise, of which me and Steve are in, then obviously it's a no-brainer that tokenization and the blockchain brings so much benefits in terms of liquidity, transparency, easiness, transfer of ownership, fractionalization options, liquidity improvement. So it has so massive benefits. And definitely if you look at a lot of these security markets, they're very outdated. And normally you would say if a market doesn't improve or update within the next 10 or 20 years, you would say, okay, that's outdated, that's a market I'm shying away from. But if we look at traditional securities, they've been the same for almost decades. So I think it's time now that the wave is there, and I think we're at the strongest position we've ever been in.
Ivo, I've got a question, right? Because
Yeah.
what do you think, kind of like makes RWAs as a key trend in DeFi now, and why should I tokenize my beard?
Well, the thing is, I must agree with all the panelists here. I mean, the whole system and the whole ecosystem in the financial sphere is a bit outdated, and there is a ton of benefits which the blockchain technology kind of offers. One of probably the biggest benefits is that it kind of surpasses these regional and time constraints which the usual markets do have. On the other side, I must also add to the previous question as well, is that back when Credefi was starting, also in 2020, where we all had like the same vision, I guess, but the market itself, from the demand side, wasn't really mature enough. So people were going after just crypto. There's like this fancy, I don't know, like NFTs, etc., etc. Mostly over for speculation reasons. Well, right now I can see that the market is kind of like maturing towards sustainable revenue bringing, cash flow bringing assets, which can actually have a future further down the line. And you must interact, I mean, in any ecosystem which if it wants to expand, if it wants to get like this mass adoption which everybody was speaking about, it needs to interact with the real world economy. We need to be a part of the GDP. We need to have like I also agree on the point that legislation and regulations are very, very important. I think that some people get scared from them, but if they're rightly structured, it is only another way of innovating, how assets will be traded within 5-10 years from now, like, and I mean assets on a mass level, right? So DeFi in the beginning it was more of a, its own ecosystem, its own thing, but right now it is expanding into actually, tapping onto the markets. Also this interoperability, which is much needed between projects. Actually, we have spoken with Brickken for this. We have a good partnership with them, but like this interoperability of actually not only transferring the assets on chain, but giving them, the possibility to leverage on them, to actually, earn on them, etc., etc. These are all very current topics and questions. And yeah, at Credefi, we have been working on them for the past 4.5 years now. And I think now the market is getting like kind of ready for everything which is to come in the next 5 to 10 years.
That's beautifully well put through. And good news is that we just broke 2,000 viewers live, and the numbers keep climbing, which is a good thing, because that means the rising interest is right there to hear from Joe about how Alvara positions itself in the DeFi direction like this.
Well, I feel like looking at regulation and legislation is one thing, but I feel like you should also be looking at the general market, like who's in there, who are the people trading it. And I feel like even that market at the moment is maturing to the point where some people are looking into more diversification and looking at a more long-term portfolio rather than the usual trend we had where people are looking for the next flip. I feel like people are positioning themselves for a 5-year to 10-year plan rather than what am I doing tomorrow. Looking at it that way, it's the perfect moment for RWAs because it's a more stable asset. And like you said, should I tokenize my beard? Yes, you should, because you can be selling beard hairs and it'll be easier access to people and they can just buy a small chunk rather than putting it all into the beard,
As we all know,
Just
Adrian
that-
has epic beards in crypto as well.
Yeah, I just wanted to acknowledge the joke because it was funny. I know everyone ignored it. So what we're doing at Alvara is we're allowing protocols that create RWAs to put it into one basket. So it allows for diversification. It's essentially a tokenized basket with automatic rebalancing where you can run your portfolio, put it on a leaderboard, and other people can actually join in and they get LP tokens in return. So we're creating a secondary market for everyone who's creating RWAs to put it into a basket, and people can even put crypto or whatever they want alongside it as long as it has a source of liquidity. So the long-term trend that people are looking at right now is actually the perfect position for both RWAs and tokenized baskets.
And what's the bodybuilder's perspective, Steve? Tell me about it. By the way, you should really see this guy just stand up once in your life. This guy is a proper bodybuilder. That's why I'm making this reference. Although incredibly gifted brain, very smart person. I'm more than happy to hear your perspective, Steve.
No, I appreciate that. And to be honest, I haven't been to the gym in about 6 weeks. We've been so prepared for the EstateX launch, which is literally just around the corner. We've been locked in, but no, I'm actually going to get back in there tomorrow. So I've got the same perspective as everybody else, but also kind of like want to add to it. So first and foremost, I want everybody in here to big themselves up because we are one of the reasons why RWA is now. There's been so much bullshit, excuse my French, in the market where, people trying to treat RWA like it's a meme coin. They have an idea, they'll raise millions, and then they'll try and figure out the legalities after. And it works if you're a meme coin or if you're a gaming company. It doesn't work in RWA, as everybody knows. Everybody here obviously knows Adrian. Everybody's being recommended by Adrian. Everybody here is a really top-tier RWA project. If it wasn't for more top-tier RWA projects coming up like us, the time wouldn't be now because people would be thinking RWA is still just, a scam or it hasn't taken off. We all know here that there's so many RWA projects out there that seem promising. They might do the X's at launch, but when it comes to the real business, they're not taking off. And it's a bad look for all of us because people think, well, why is RWA not taking off? But we all know that they haven't done legalities. We all know that they haven't set up the structures properly like we all have. So the fact that, there's more of us leading the example of what a real RWA company should be like. Obviously, we are actually making the time now, so to speak, as cheesy as that sounds. Also, as well, I just feel like with the market and just the way the world is going, the average, we're all very privileged on this call. We can travel around the world. We can pay our groceries, we can go to all these crypto conferences, but the average Joe is struggling right now. I say this all the time, like the average 30-year-old can't even get onto the property market, and rates of inflation are going through the roof. You know, people can't spend the same amount on groceries, as I said before, and you know, even just their car insurance is doubling and tripling. There needs to be a solution. So when you're in a world where the inflation is going through the roof and people are living paycheck to paycheck, and the average 30-year-old can't get onto the property market, taking property, for example, fractional ownership and tokenization of property is a natural progression. Just like when the internet came out, and obviously card payments was a natural progression. People were skeptical whether it would take off or not. Now everything's online payments. It's the same thing as well. Like, you know, everything is going to tokenization. Another reason why the time is now is that you've got massive organizations, as you guys pointed out, Larry Fink, the CEO of BlackRock, even kind of like Brock Pierce, the co-founder of USDT. He's been looking into RWA the past 2-3 years. He's rejected all the RWA projects. He said, I'm bullish on it, but I'm not really feeling the projects that have happened so far. We were presented to him by one of our advisors, and we actually got rejected the first time. And her name was Marcia, and you know, she introduced us, and I said, Marcia, because he said it's like, oh, it's just, I've seen it before. It's RWAs, tokenization, real estate. Nobody's really, you know, got it and being unique. And I said, Marcia, put me on the phone with this guy, and you know, put us on the phone with this guy just for 20 minutes, and I guarantee he will not say that we're like any other RWA project out there or any other tokenization real estate project. That 20-minute conversation ended up being 2.5 hours. He flew us out to Puerto Rico, and within 48 hours after that, we signed a deal. Normally, it takes 2-3 months, and it took like a fraction of the time, no pun intended. And now you've got the co-founder of USDT has invested heavily into RWA, into EstateX, and he's one of our advisors, and we speak to him like once or twice a week, type of thing. So just things like that, having like big, massive public figures getting involved with it. Larry Fink, the co-founder of USDT is massive. You know, massive real estate organizations as well. We've closed the deals with Remax, one of the biggest property brands in the world. We've got a video recently posted. The CEO of Remax England and Wales, Steve Craggs, posted a video about how bullish he is on EstateX, how he's investing in the token, how he's an official board member now, how he's come on board as global director of distributions. He's actually in Europe now finding some amazing properties for us to be able to tokenize on our next property offering. This would have never happened like a year or two ago. You know, if tokenization didn't have a future, if we didn't, projects like us didn't prove that this was proper and this was real, you wouldn't have these big Web2 organizations, these big names coming in. So that adds a lot of credibility to what we're doing. And my third part, what we're all doing as a collective, and my third answer to that question is, as I always say, like, take yourself, Adrian, you're from Poland. If you went out to the city center of Warsaw right now and stopped 100 people and asked, are they currently invested in crypto? How many of those 100 people would say yeah?
Very few.
Very few.
Probably 2 or 3.
Yeah, same here in like Birmingham and London in the UK. It's probably the same way everybody on the panel. Not talking about crypto users, not talking about certain, people within your circle, just average people. But if you ask those same people, have you ever thought about investing in a piece of real estate in your life? 100% we're going to say yes. But a lot of those people are not able to get onto the property market. So, it's just there is a massive, massive, massive need for this. And obviously with RWA companies like everybody on this great panel doing it correctly, the market has just really opened up for us. And then now you're getting all these institutions, all these big names, and it's just that massive snowball effect. And obviously when we continue to grow for success, it's just going to be encouraging more and more people to do that. But I think the main thing that we all need to focus on is how we can actually convert Web 2 into Web 3 as well. With EstateX, we focus on Web 3, but we also have a big, massive element focused on Web 2. Those 97% of people in the street that want to be part of RWA, but think it was a scam and have no way to kind of do it. So providing that seamless transition from Web 2 to Web 3 is very important.
Ivo, you actually brought a very interesting point. I'm going to pull up a chart right now, right in front of us. This is by RWAXYZ.xyz, and we're looking at the total RWA value right now, right? For the private credit, for non-US government debt, for the stocks, for the treasury debt, for the commodities, corporate bonds, alternative funds, and so on, out of which private credit is actually the biggest chunk of the entirety. We're talking about the growth of the last year from 8.5 billion all the way to almost 17 billion. So 100% growth in a matter of less than a year or so. Those are the numbers, right? And there are different chapters to the RWAs overall. And you brought a point about the interoperability, Ivo. And this is this is where the next question goes to you, my friend, because speaking of the interoperability, how do you see kind of like future? Where do you see the future for RWA's platforms? How do you see the collaboration going around it?
Well, the thing is, as EstateX they just said and mentioned, is that a lot of people think that investing into crypto and crypto markets, it's basically just go out there and buy Bitcoin or Ethereum, like the major ones, right? But there is so much more to it. I mean, there is actual businesses behind it. The difference between, probably everybody who is here on the panel and some other projects as well. Is that we operate as real businesses. I mean, we do have the background, the necessary background. We are basically battle tested in terms of like how we design our instruments, how we have been, what we have been doing in our previous careers, etc., etc. So technically speaking, when you are acquiring, let's say, a tokenized asset, you are actually buying something which is out there in the real world, right? So it does have value, and then there is like this question: who can evaluate it, and what you can get out of it as well. So when it comes to interoperability, okay, I can acquire, let's say, a fraction of a house in London through a token because it has been tokenized. Good, right? So I have a fraction of a house, but then what do I do with it? Okay, I can perhaps get like some stable income out of it. However, can I go to the bank and actually ask the bank to loan me against it? Not really, not at the moment. However, we being at the front, same as like Credefi, for example, we do want this. We want to give like this option to people to actually not only have the ownership but have actually complete full financial power with it. So having being able to trade it is one thing, but being able to leverage on it, being able to actually utilize or compound on it, like all of these financial instruments, they have been there like in the past, but they were in a more bureaucratic, traditional manner. What we're trying to do is actually revolutionize this kind. I mean, I know revolutionize sounds a bit very stereotypical, but it is that way. It's an evolution of how you trade, how you work with your capital, what you are achieving with it. All of these things are very, very important, both for the retail users, for institutions as well, and also for us as projects. So we are a fairly small ecosystem, and it's the best way we can actually give value to our users is to partner up, give each other different, let's say, access towards different services which everybody uses, right? So Credefi, we're not tokenizing, but we are utilizing tokenized assets as collateral, for example, right? So in the meantime, partners from Brickken, they're tokenizing assets, but they still haven't had like the financial, let's say, lending and borrowing against them, etc., etc. So we are basically designing a financial system which is very decentralized, very open, without regional and time boundaries, and to basically the average person can have easy access into it, right? If I want to, let's say, buy a bond of a certain company which is traded only on the New York Stock Exchange, I need to go to the New York Stock Exchange and find a brokerage company or I don't know, like an investment bank, so that I can acquire it, right? With blockchain, you can do it in like less than a minute.
And before we pass the mic over to Edwin and Joe from Alvara, I have a question for you, Kyle. Right? What's your stance? What's your take? What's LandX's take about the cross-platform integrations?
I mean, composability has always been one of the chief motivators when making roadmap decisions, and that's because in order to be successful, the ecosystem has to grow. It has to be interoperable. At the end of the day, I think we're moving toward an omni-chain digital landscape. So I think it's not a question of if each project is going to integrate interoperability measures, but it's just when. Because we're talking about a ubiquitous system that's going to replace the entire financial infrastructure over the next decade or two, or however long it takes. I'm not a technologist, so I can't give a competent prediction, but eventually, interoperability is going to be a thing of the past because it's just going to be a no-brainer solution in the same way that in modern society we've got currencies that are specific to each country, and then we'll achieve a standardized international system of commerce based on the blockchain. So I think it's an inevitability.
Edwin, your take on interoperability, please.
Yeah, I think asset composability and interoperability are hard words. So what does that mean, really? It's that how easy an asset can flow around different silos of information. Because in TradFi, I mean, you go to the bank and it's just one standalone silo that has to capture all this information from your background in case you want a mortgage or how you want to collateralize your own assets. They don't even accept them all. So, I mean, something that's as simple as this. You got stocks from Robinhood that is worth, and you say, oh, I'm the owner of Apple stocks. All you really know is the broker who has a position, that you have a position in the brokerage. And if you were to collateralize those stocks, you couldn't even do it. You can't go to the bank and say, like, hey, I got 1 million worth of stocks from Apple. They will say, like, yeah, I don't care. Where's your hard asset? Where's your real estate? So that's kind of like stupid, because in reality you do have value that is locked in an asset, but you can't even use it. I mean, it's only for personal wealth, for flipping, but how can you gain even yielding on it? Like that in TradFi, it's not available to the retail. So here, this is kind of like one of the use cases that Ivo was talking about, kind of like a client of us tokenizes, issues this token on primary market, gets funded. Then they can have the play of collateralizing the investors, their portion, or the investor himself, their position, through DeFi protocols, through Ivo doing the lending or the borrowing against that asset, because it's value. It has value in that container, right? So I mean, that's something that it's mind blowing when you explain this to TradFi people. And I have talked a lot. I come from that kind of like world. And some of my friends coming from Big Fours or whatever, and then I explain all of these movements on blockchain. They're like, I didn't even know that was possible. And it's like, this is the whole fact. We were never taught, like we never got educated into how to manage our world finance or how to do all of these things, because we always play in this kind of like silos of information that only one entity has the whole power over the asset, has the control. And over here, we're decentralizing and giving access to everybody. So that's pretty cool. But it's more about what can you do with value? Now you can increase it with yielding, with DeFi, with new protocols, with the baskets from Alvara, or everything. Like every day, there's new solutions being brought to the space, and it all comes from real value, because we're not playing with utilities values that is on the market, or maybe speculative assets or whatnot. Here, it's hard assets. The real estate from EstateX. I mean, if they're tokenizing something, I don't know, in Dubai, and then that creates value, then that investor, myself, if I invest there, I can go to a DeFi protocol and say, like, hey, I got 100K worth in this house in Dubai. That in TradFi, they would be like, that's not doable. That's not how it works. I need the hard contract, the notarized position, all of these bureaucratic things, and it's not doable. So my investment of 100K is only worth on a flipping. I cannot accrue value on that position. But with blockchain, all of this becomes possible. I mean, we know how DeFi on 2021 created all of these different like products, and they were very complex. All of those are getting more mature, and now in the DeFi renaissance, we're going to see a lot of those start triggering real world assets, because for once they're against a hard value. It's not a smoke in the mirrors, kind of like some products out there where here there's value because there's backed by a real world asset.
It's finally something that Warren Buffett would say perhaps it's not worth zero then, right? If there's an underlying value right beneath.
Absolutely.
Jokes aside, Joe, final question on the interoperability side. Why should we share the liquidity? Why should we care about the cross-platform integrations?
I think assets can have collateral, like a fractionalized piece of real estate. But when it's illiquid, how much value does it really have when you're trying to generate yield on it or trying to put it up as collateral for something? Like, it's mostly about liquid assets, I feel, in this space, and it's something we're still looking into with Alvara and creating the baskets, because when an asset is being put into the basket, it needs liquidity on the other end. So that's something we're still looking into, especially with tokenized real estate, or what LandX is doing with tokenized commodities, because we are actually partnered with LandX already, and Some of their tokens are on our testnet. Everyone's of course welcome to check that out. But yeah, I think liquidity is a really big issue. I'm actually curious, for example, how EstateX is handling the liquidity on the tokenized real estate, and if you guys could elaborate on that.
Yeah, 100%. I remember a conversation that me, Adrian, Pavel, and Steve had back in India in last year, actually, when we met. And yeah, it was a great conversation. Took a couple of hours, I remember, in the hotel lobby. And I remember just all us being so excited about improving, the real world asset sector. And actually what it in the core, what it means is basically adding liquidity to markets and to asset classes that have been illiquid as long as its existence. And that is what transform markets. And I also think that is what will accelerate, RWAs, tokenization in general. Once you have like a kind of a solution for that, I think that will accelerate mass adoption. Now, how do we do it? There are multiple ways to do this. Obviously, we work in multiple ways to add liquidity to these asset classes that are illiquid. One of the options is our secondary marketplace that we will be launching. Our secondary marketplace increases liquidity in the sense of it's a peer-to-peer marketplace. So there are options for investors to put out their offers and trade quickly with other investors. But this is obviously all depending on supply and demand. So if you want to add real liquidity, it's a matter of, I think integrating with other ecosystem, definitely things like lending protocols is definitely something that is a short step up between reaching liquidity for investment platforms, which could be very well in reach for everyone. What we do is we work closely with partner funds from some very big investors, such as the co-founder of USDT that we have, where we're actually finalizing commitments to put up significant sums of liquidity against tokenized real estate. So we actually are able to partner with these big liquidity providers, these big liquidity funds, to be able to put up capital for things like collateral, which are real estate tokens as collateral, get out instant loans, get out instant cash out options, where there will be like a slight difference obviously between what is worth and what is being sold for. So I think in practical way, we solve that in 3 ways. So secondary marketplace, instant loan option where you can get an instant loan with your real estate tokens as collateral, and instant cash out options with our personal connections with those liquidity providers. So but I think partnering up with DeFi protocols or liquidity providers is definitely a key step. There needs to be cooperation between everyone within RWA, to be able to make this work and accelerate mass adoption.
Yeah, and it's so kind of like important for just progression of I don't want to say humanity, but just with the people, most people, if we say to people, go and withdraw $100 from your house, you can't do it, right? But if I say go and withdraw $100 from the ATM, you can quite easily. The banks have all the liquidity, the banks have us by the balls, so to speak. The disadvantages of like real estate or RWA is that it's not, as Bart mentioned, it's not very liquid. So what we've got is something called EstateX Pay that allows you to pay for your everyday goods and services with your real estate. So imagine having like a debit card. You got your whole real estate on there. Through the DeFi off-ramp and our liquidity providers, you can now go and pay for your groceries with it. You can fuel your car with it. You can go and pay for a burger with it. You can tap, swipe, and just use it as a normal debit card. So we're taking now, with the real world use cases of this, we're taking all of the advantages and liquidity from the bank and none of the disadvantages from your property, because as one of you guys said earlier, it's very hard to get money out of your property. You have to go and like remortgage your house and sign your life away and all of this sort of stuff. It can take weeks, months, credit checks, and to get your own money type of thing. So with EstateX Pay, you have all of the advantages of real estate and none of the disadvantages. The great thing about real world assets and RWA real estate is you put your money into property, it's actually gaining money through capital gains, it's actually gaining money through rental income, but you put money into a bank, over time you're losing money through rates of inflation, right? So think about like Sharon, who's from London, she's a single mom and she gets her kind of like her wages come through every month. With all of these things in place now and all of these liquidity stuff in place that we're all talking about, why would Sharon need to use the banks anymore? Where she puts her money into the bank and she's losing money through rates of inflation. Now Sharon can put her money into real estate, gaining money through capital gains, gaining money for rental income, but she still has that liquidity where she can use it like a normal bank card as well. So why would she need have the need for banks? So I think it's like, you know, again, I understand what my friend over here on the left was saying about we don't like using the word revolutionary. We should do, because what we are doing is very revolutionary. However, it's just so many people have overused that word and not really done anything revolutionary. It's kind of like taking the sting from it. But what we are doing and the liquidity side of things is revolutionary. It's not just great from the crypto point of view, but from the real world, it really is going to be transforming lives and how people actually look at banks and how they actually look at their finances.
And this take on liquidity, but please go ahead.
No, I really think there's a massive use case when you pick up the challenge of liquidity and real world assets together. And why I dug into it is because what people want is not have exposure to a single sector. Like, people are not going to just invest in real estate. People are not going to just invest in commodities or say just invest in gold. People always want diversification. That's why you see the pension funds always invest in ETFs with a spread between bonds and a spread between stocks to diversify and adjust the risk. That's why we're here. Like, we want to bring together LandX, EstateX, Brickken, and create baskets of everything together. And what people could essentially do is, instead of just holding one asset or going shopping at every single protocol and purchasing it one by one, we could connect all you guys and put it all into one fund and create secondary markets for everything you guys are creating. And it's not just us doing it. It's essentially people being able to shop on our platform, and we're going to be pulling it from your platforms. So people can come onto our platform, create a basket, include all your real world assets, combine it with crypto, combine it with some stable assets, and create a full portfolio where they can manage everything together. And together with Immersive, which is a credit card provider, it's the same thing. You can connect the credit card and you can essentially spend your BTS LP tokens, which is the LP tokens for the basket, in a similar way to just spending your real world asset tokens. So we're just here to enhance you guys. We're here to create a secondary market for you guys so people can create a diversified portfolio in one place. But the main challenge, I think, still is liquidity. And the way you guys are doing it, it's just brilliant because it's easily connected. People can easily access it. People can easily liquidate it. And I think that's the main challenge that, for example, real estate currently has.
And not only real estate, right? Because this actually takes me to the final chapter of this roundtable discussion, and something that I think Ivo Grigorov is going to love so much, because the credit markets, right? Let's talk about the credit markets. How does it all correlate with the credit markets? How do RWAs kind of like improve credit markets within DeFi? Ivo, would you like to take voice on that?
Yeah, of course. I mean, just going back to the previous question regarding liquidity, I've always been, my opinion has always been that, if you're offering a good service, if you're offering something of value, liquidity does come sooner or later. But at the end of the day, okay, we're speaking about, illiquid assets which become more liquid through RWA, but that's in my opinion, it is the case only for for certain type of assets. I mean, if you're having, let's say, a real estate which doesn't really have that much value and people are not interested in general into it, just by tokenizing it, that doesn't mean like it's gonna be a gold mine, right? So, if you have a house which is valued at 20,000 and you cannot sell it for the past 10 years, you will reevaluate it at 10,000, right? And then at 5, and at the end of the day, like, if nobody wants to buy it, nobody is gonna buy it, right? So, liquidity comes also with with the actual value and with what you're kind of offering. Just by tokenizing or fractionalizing it doesn't answer the question. And the thing is here, regarding the what you guys previously said, like in terms of credit markets, it's the same. Like if you go to the bank which evaluates your, let's say, house or your stocks or whatever you want to, like, let's say, use as collateral in order without selling it technically. again, there is a valuation process. There is the standard scoring. We're doing it at Credefi as well, even for tokenized assets. Everything goes under score because it's part of the risk methodology, right? Nobody wants to expose their, let's say, liquidity providers towards default risks. Nobody wants to expose them towards collateral which we cannot sell, or we cannot recuperate the funds from, right? So it is very important how we assess that. It's very important how the actual tokenization process has been performed by the relative counterparties. However, it does open up a lot of doors. As I said, being able to use, let's say, a fraction of my house and a fraction of my car and a fraction of, let's say, my stock portfolio to go out there and, without having to sell them in order to access some kind of a liquidity. That's amazing. That nobody in the traditional financial world can offer you such kind of a service, right? At least if you're not a huge corporation or something. But for the average user of such kind of instruments, they have never been actually accessible up until now. And yes, diversification is very important, but also diversification of the collaterals as well, because you cannot, diversifying your portfolio when you go, in order, when you're investing in it, and in order to minimize risk. It's the same way with the credit markets as well. If you want to have exposure towards, let's say, certain industries, you have industry limits. You have different assets within different, let's say, collateral pools. And I think this is very, very interesting, and we're just scratching the surface here. At the end of the day, I'm quite sure that different baskets of assets, different collateralized asset-backed securities will, well, they're not securities, but asset-backed, let's say, tokens, will have indices. There will be a lot of different financial vehicles and instruments which are coming to the market. And also with Credefi, we're working onto this bigger picture, which I'm sure will come at the end of the day, having different options for everybody to actually participate within this ecosystem.
And that one of the closing thoughts as we get closer towards the wrap of the session, Edwin and Kyle, I'd love you to take it, hear your take basically on to what extent can tokenized RWAs can really solve issues like over collateralized crypto lending. Let's start with you, Edwin.
All right. So, it's solve. I think it's. I wouldn't put the word solve. I think it's just another possibility. It's a new opportunity. It doesn't have to solve legacy problems. They will always stay, because I think the world will go hybrid. Some people will get used to still use legacy systems, and the new, let's say, the new companies or the kids on the block will try to use the new system. But I don't think it's going to pivot all the way on chain towards off chain, because there's still a lot of regulation that needs to be updated and whatnot. So in that situation, I do think that things on chain are more optimized. They become more efficient because there's less intermediaries. Information is more symmetric. At all times, it can be visualized by and even change or whatever at any point in time from any point in place. So that kind of creates a new efficiency layer. So the idea of collateralizing RWAs, it's very interesting even for us in Brickken. We're still analyzing how could we create a product, and not ourselves. How could we hook up to already someone who already has that layer? And that's one of the great things of Web3. You don't have to fully do your 360 product. You can start plugging in more easily with other projects than in Web2, which is very hard to do integrations because of all the information or how that works. So here, I think that the fact that RWAs are going to get collateralized, it's just a matter of time. I've seen a couple of projects that I'm following and investing in a couple actually who are trying to do this, the collateralization of RWAs, because we want to give an exit. So once in Brickken they do the primary market, they get the issuance and the fulfillment of capitalization. What happens next? There's treasuries, there's value created, there's TVL. So we want to start understanding how that second layer works. And for us in Brickken, I don't think we're going to build it ourselves when there are already great players out there doing all of this. Obviously, the biggest one, Aave, but there's always other ones that are now focusing on how to bring that layer of collateralization to RWA, which is super interesting for us. So as a solution, I just think it's a new opportunity, and as a new market, because we can call this still a new market. It's not by any means still mature, so we're still far away from all the possibilities that can happen. Today, it's why the big players are entering. It's not just for the first issuance. The primary markets are trillions, but the secondary markets and the collateralization are times 10 trillions, because there's so much fees that are trading fees, new defaults, interest. So that's how the markets work, actually. So the fact that we're seeing the big institutions coming at the first layer and still trying to understand how that DeFi layer works, it just tells us that how early we are, right?
And well, I think that the same question I was supposed to ask to Kyle, I think he's gone, so there might be some glitch or so. However, it also was that.
I think he's trying to join back in, but
all right. Well,
I have no idea.
I hope he joins. Still, in the meantime, I think that gives us a clear, good reminder that we are actually getting towards the wrap of the session, and I would love you for you gentlemen to take the last kind of like a round of the closing thoughts, right? So, are we expecting some good things, or are we expecting some bad things in the next, let's say, 12 months? Let's start off with Bart, and we're gonna give it a whole round for everybody, please.
I think I think the world of traditional securities is never standing still and is always evolving. And I feel that definitely the world of digital securities is definitely evolving over the last year. So this is my thought process about RWAs in general. I truly believe that RWAs, or probably the next bull run, will kick off by being introduced by RWAs, and that being the new leading narrative of the next bull run. I truly believe that with institutions getting into it, BlackRock opening up its fund, and it more maturing and developing, and regulations being adjusted upon that. I truly believe that that's going to happen. So I see the future of digital securities and RWAs very, very positive. I'm very bullish on it, so to say. So I think that we're all I make this comparison all the time. It's like tokenization is still in its baby shoes. You know what I mean? It's still like we're at the internet in the year 1998. There's a revolution upcoming. It's going to be the next big thing, and it's going to transform traditional markets and inefficiencies in a lot of traditional asset classes, as we know. So I'm very, very excited about that. I'm going to watch, obviously, very closely. We're all at the forefront of it, disrupting this industry, trying to improve it, and trying to bring real solutions to the people and to the people in the sector. So I'm very, very positive on it. Let's move forward, all disrupting this industry, and let's see how it develops.
Thanks. Kyle, 1 minute, closing thoughts, expectations for 2025 for you.
Yeah, sorry, I had a brief connection interruption, but glad to be back. I have to echo what was just being said. I expect that moving forward in the immediate and medium-term future, we're going to see some regulatory changes that are really going to open the floodgates for progress in the RWA sector. And I think it's a no-brainer. I mean, we're just talking about the modernization of the financial system. So this is the way things get built. They get built on what retail has probably deemed unexciting. But I mean, it's just the infrastructure. It's the foundation that has to be laid for the more exciting stuff that retail will be super hyped about and speculating on. But at the end of the day, the real value that's being delivered by, in my opinion, the entire cryptocurrency industry is the digitization of real world assets. So I think it's the main use case, and definitely the strongest value proposition that the crypto industry has as a whole.
Beautiful. Same question to you, Edwin. Closing thoughts, expectations for this year.
Yeah, hopefully this doesn't backfire to me, but I think this is the year of RWA. There's a lot of great insights and occurrences around the world that is happening to establish that tokenized securities, financial instruments, or whatever we want to call it, are coming on chain. So I expect a lot of great news. I mean, if last year the biggest asset manager came on chain, I expect this one just to start coming different asset managers from different countries. In Europe, we're already seeing a couple of big ones trying to tiptoes and understand. We're a little bit slower here in Europe, but doesn't matter. We're still a powerhouse and economic value. So I still think that there's a lot of great news to come. So yeah, I'm gonna double down and say that this is the year of RWA. So follow all the great projects of here because you never know what's gonna happen.
Good statement. I subscribe to it as well. Ivo, same question to you. Closing thoughts, 2025 expectations from Credefi
Well,
perspective.
I do think that we're just at the start of the race. I mean, I think that people will start realizing that, RWAs is actually another term of just gaining access to limitless possibilities in terms of, financial assets management, etc. So, as all of our colleagues here said, like, I think it's just the beginning. We're just scratching the surface, and most probably a lot of other players are gonna come into the space, especially institutions, and this would open the floodgates for retail as well. Yeah.
Love it so much. Jose, question, closing thoughts, 2025, what's ahead?
I think I would agree that we're just at the beginning. I do think 1 year when you look at 2025 is a very short time frame, and I don't think we're there yet. I feel like it's gonna be a good year for RWA, but I feel like the real adoption is still a year or 2, 3 away, maybe. So I'm not trying to be bearish. I'm just trying to be a little careful with expectations. But I feel like it is going to be a good year for RWA. But I feel like it's going to be the initial adoption, and it's going to kick off later.
100% growth since last year, Steve. Is it going to continue this year?
For sure. I think there's a lot of people from Web 2 this year is going to be going into Web 3 through RWA. People are seeing Trump meme coins, people seeing all of this other stuff, and they're having good thoughts about it, bad thoughts about it. But crypto is getting that attention again in the mainstream media, and it's getting that attention again for, like, the normal people. But people aren't really going to get and understand a lot of these other projects, but they understand RWA. So I feel like as long as it's communicated correctly to the audience, RWA is going to be popping a lot of crypto cherries, so to speak, and it's going to be, and it's so important because if we want, Bitcoin to get to the 500K, we've got to be getting more users, new adopters into crypto. A lot of people who would have already invested in crypto are invested in crypto. I do think RWA is massively going to be bringing in a lot of Web 2 people into that. So I do think we're going to see a massive upturn in that in 2025. We've already seen in 2024, even with EstateX, for example. Don't mean to do a shameless plug at the end, but when we offered our users if they wanted to stake, yes or no, and 1 year to 20 years, on average, over 55% of our tokens, pre-sale tokens, have been staked and locked for an average of 7 years, which is unheard of. It's almost 2 bull cycles because we have Web 2 audience and also a Web 3 audience that understand that bigger picture type of thing. So it's just so important that we're bringing more Web 2 people into it. And I'll probably say as well, one thing that we're going to see is just a lot more. Yeah. I'll probably just leave it at that. I'll probably just leave it at that statement type of thing with Web 2. Actually, one thing that I will say, and I understand we're talking about, I agree with what everyone says about the next bull market, and RWA will hopefully be at the forefront of the bull market. But I think what's really important is I think RWA is going to be at the forefront of the bear market. I think that RWAs are going to be growing throughout the bear market in a rapid rate in comparison to other people that may actually be declining, and especially just like tokens like ourselves that we take Web 2 revenue and we do that and feed that back into the Web 3 token. So even in a bear market, us obviously selling the real estate is actually still be driving up the token as well. I think we're going to be seeing a lot of that through the bear market, which is going to be bringing a lot more of attention to RWA. And then obviously, as you guys are saying, at the next bull market, we're going to be at the forefront. So we disrupt the real estate industry, the banking and lending industry, the education industry, and we're all on this epic journey to make history. So let's do it, guys.
Love it so much. Ladies and gentlemen, what an incredible panel roundtable discussion joined by Ivo Grigorov of Credefi, by Steve Lorenz of EstateX, Bart, Bruijn, EstateX as well, our incredible partners, both of them, Joey van Etten of Alvara Protocol, Kyle as well from LandX Finance, Edwin Mata of Brickken, and I've been your bald bearded host that's going to tokenize his beard, Adrian Zdunczyk, CMT. Thank you so much, gentlemen. Wealth of knowledge. Let's make our RWAs big this year. Thank you so much.